Hi Anurag.
Pari.
Hi Anurag, morning.
You able to
Hi,
hear me?
Deep. Good morning.
Hi Parinita.
Yes.
Hello.
Yes, we are able to
Hello.
hear you. Yes, Pari, we are able to hear you.
Anurag, can you hear me?
Yes, I can. Yes.
Anurag, the screen share is switched off from your end. So if I need to share screen, you need to enable that.
Oh, okay. Okay. Parinita, I think you will have to, switch on the screen sharing mode.
Hello.
Yes.
Hello.
Hello, Pari. I think,
Anurag,
I
can you
think you
hear
will
me?
have to enable, yeah, I can hear you. And you will have to, I think you will have to let Deep share his screen, like enable his screen sharing.
So is it visible now?
Yes.
Okay, good.
Hello. Hello. Am I audible?
Yes. Yes, Pari, you are audible. We can hear you.
Hello, Anurag. Am I audible now?
Yeah, you are audible. We can hear you.
Hi Anurag and Deep.
Hi Parinita, morning.
Can you unmute your
Yeah, we can hear
hello?
you, and we can hear you. We can hear you very well.
Anurag, I can't hear you.
Uh, yeah, I think Deep, can you hear me?
Yes,
Hi
very
Deep.
clearly.
Yeah,
Hi, morning Parinita.
yeah.
Why am I not able to hear anybody? Mm. Hello.
Yes.
Yeah, hi Deep. Hi Anurag.
Hi,
Hi
Parinita.
Parinita.
Hi, I'm so sorry. There was some lag. I was not able to
Okay.
hear anybody.
Okay.
So like we have discussed, first we'll go with the presentations. First, I'll introduce you guys. Hello.
Sure. Yeah,
Yes.
sure. Please go on.
Yes, I'll introduce you guys, then we'll move on with the presentation, and we'll take the questions at the end.
Sure.
Sure? Okay. So we'll just
Sure.
give 2 more minutes for the participants to come in, and I'll admit all and we can start.
Sure.
Yeah, sure.
Sure? Yeah. Good morning, everyone. So I've admitted quite a few lot of people. So I'm muting all except for the two speakers, and we'll start in 2 minutes. Okay. Thank you, everyone, for joining in. Okay, so shall we start, Anurag and Deep?
Yeah, sure. We can start.
Sure. Okay, so I'll keep admitting people whoever are left to come in. Okay. Okay, sure. So good morning, everybody. Thank you for being here. A start to the June, hopefully a good June. Looking forward to it. Thank you, Anurag, for hosting this webinar on such a interesting topic. Although I'm not practicing chartered accountant, but still this topic really seems interesting. So let me just introduce our two speakers for today. That's Anurag and Deep. So Anurag is an internal controls and risk professional, and he has a very good experience of more than 6 years working in firms like EY, BDO, and he currently um, he he is a cricket enthusiast, and he is also dedicated to spreading his knowledge and learnings with his series of Learn with AN, and which is why he's been hosting such webinars. He has started hosting such webinars. So thank you, Anurag, for coming up with this topic. And let's come to our second speaker, our main speaker, Deep Mendarata. So it's an honor to have you, Deep, with us. He is a chartered accountant and has a very rich experience of more than 12 years working in firms like BDO, and then eventually venturing into his own practice, DK Mendarata and Company. And he's focusing in the domain of governance, risk management, and audit and compliance. So you can see why this topic is such a focused topic, and we have an experienced professional, Mr. Deep and Anurag, sharing their first-hand experience with us. So I'm sure today's session will be immensely beneficial for all the professionals who have joined us. So as the flow of the event will go, we will first go through the PPT, and then we will take up the questions from you guys. So if you have any question in between, you can please put it up in the chat box, and we'll take up all the questions in the end. So let's start. So I'll hand over the floor to Mr. Deep now.
Sure. So first of all, thank you to everyone who's joined in on a Sunday morning, sparing your time. And I really appreciate this effort from Anurag and Parinita. And I'm happy to join in on any conversation on internal controls, risk management, governance, compliance, and auditing. So the way we'll be going forward is, so I've designed this presentation to keep the discussion a bit objective so that we don't lose track of time and we are, meeting some of the expectations which the participants might have. So the contents of this PPT, first of all, let me check if this screen is visible to all of you. If anybody who's not able to see the PPT, just type in the Zoom chat box. So the contents of this PPT, I'll just take you through. First of all, I've defined some learning objectives for this session. Since we are all spending time and you've separated your Sunday morning 1 hour for this. So I thought let's keep it objective. We'll also be discussing some of the common pitfalls in internal control over financial reporting. What are some of the common mistakes that companies generally do, and some definitions around, let's say, governance, risk, ICFR, internal control. This is for the benefit of, let's say, young chartered accountants who are just starting off. For seasoned professionals, you might feel that we don't need to discuss the definitions. You've been reading those for a lot many years, but still to keep it objective for the larger audience, I think I've just put one slide, two slides on definitions. Then some key considerations for ICFR and IFC projects. Then we'll be going through the phases and broad steps which generally you go through when you are planning and executing your ICFR projects. We'll also share one template on illustrative project plan, which will have all the detailed steps, which typically you can use in terms of if you were to delegate this to your team or anybody who's junior in the team who needs a bit of guidance. Then we'll also share one illustrative template for risk and control evaluation, which would be more like a dummy template, which you can use for practice or your team can use for practice to innovate it further, to improvise on that template. You're free to do so. Then we'll also be discussing on a bit on proposals and some key considerations for proposals. This would be most relevant for people who are into practice, young chartered accountants who are wanting to be in practice. So let's say if you were to draw up a proposal, or let's say if you're working with a consulting firm or a CA firm, and your next level is a managerial level and you want to just draw up proposals, what are the key considerations that you should take? And then we'll also share one illustrative template for proposals that will be just for illustration. You can use or improvise on that template. And then at the end, list of some important references which you can use for IFC and ICFR or internal auditing in general. So first, a disclaimer. So this is not an advertisement of my professional work or services. This is purely an academic session, an awareness session for the benefit of young chartered accountants and professionals. And this document is only for the purpose of knowledge transfer or just an awareness session, so to say, for those chartered accountants who are sparing their time. And we'll be sharing some links, templates, presentations. So this is not intended to offer any advisory in any form or capacity whatsoever. And the panelists do not have any commercial interest in conducting this webinar. And then this is not intended to solicit any work directly or indirectly, or solicit any clients through this. The reason I'm giving some of these disclaimers is because as a professional practicing chartered accountant, I have to be mindful of these things and I have to abide by these things. So you please bear with me for this disclaimer. Then this document is a brief outline and does not cover the topic or the technical aspects in detail. Like I said earlier, this is more of an awareness session for young chartered accountants. And most importantly, one size does not fit all. Whether you're working in a consulting firm, working on a client, or you're working in an organization, you need to be mindful of what the specific requirements of your particular project are, and then customize your solution to the expectations of the organization or the client or let's say the project management team in general. This presentation is only for the purpose of this webinar and not for public circulation. Then some ground rules. Parinita has already mentioned that whatever your queries are, we'll be taking all those at the end of the session. And you're free to type in your queries in the Zoom chat box or on the WhatsApp numbers given below. I think Zoom chat box would be most practical so that everybody can get a hang of those questions. And if there are some common questions, we can clarify those. And in case there is something which you feel is left out due to the paucity of time, you're free to WhatsApp me or Anurag for any of your questions or queries. And we'll be not discussing any or deliberating any company specific or organization specific issues. So we'll just keep it as a generic awareness session. And the templates at the end of the session are generic templates. And these are for the purpose of illustration only. And you can freely download those from the LinkedIn page, and those are available there. And before we begin, one most important disclaimer, like I said, one size does not fit all. Please be mindful of the environment that you're working in, the client that you're working on, and the expectations and the objectives of ICFR and IFC engagements that you work on. So some of the learning objectives I have broadly mentioned here is one primary objective is to simplify the concept. Like we read the theory as per the Companies Act, we read the theory as per the guidance note, we read the theory as per a lot of available literature which is there. But what is most important is how you put that theory into practice, how it becomes easier for you as young chartered accountants, as professionals, to use that theory to your daily routine jobs, whether you are doing ICFR, whether you are doing internal audits, whether you are going one step ahead and doing some fraud investigations, assignments, those all will have the elements of internal controls in them. Then one more objective is to extend our thinking. Let's say there will be a lot of things which you people will already know, and what we'll do is just contextualize it in terms of, let's say, business problems. And as consultants, when we see business problems, we have to come up with practical solutions to those business problems. Another objective I've laid out is becoming more resourceful. I think we all face that challenge when we are starting off young, or initially during the initial days. We don't have those many resources, and we are more dependent on our managers, on our superiors, for gaining some knowledge or experience through whatever they have experienced in life. So it is always good to be more resourceful. The more resources or knowledge you have in your hand, I think the more independent you become, and it helps you to really take up things, lot more things independently. And one more objective is to help you structure your ICFR templates to solve multiple objectives. Let's say one of the key elements in ICFR, internal audits, or let's say fraud investigations, are internal controls. So how you can leverage the same templates for internal audit, your ICFR work, your risk and control self-assessments, or even some of the controls which might have an element of fraud, how you can use those in your fraud investigation planning and all. Then sharing some useful tips for better understanding of the topic so that you can effectively manage your ICFR projects. And then also looking at ICFR beyond compliance aspect. So one of the key things that most companies expect out of ICFR engagements is making a compliance to the Companies Act, and satisfying the statutory auditors with respective or adequate documentation. That is one agenda. But to really gain value out of ICFR, people have to look beyond compliance. And as professionals, I think you have a lot more to offer with respect to internal controls. If you were to just take ICFR as first step, or a very basic baby step, if you have to move or progress towards this journey. Then also one slider on learning about the wider solution offering within the internal audit domain. Internal audit as a profession is very vast. There are a lot of areas where internal auditors can add value, and there is lot of thought leadership going around those areas, especially after this COVID scenario. So we'll briefly touch upon those things as well. Then some of the common pitfalls some of the mistakes that companies make. These are not specific to one particular company, but generally what I've seen in a lot of ICFR engagements that I've done. So a lot of people think that ICFR is just for documentation compliance to the provision of the Companies Act and to ensure that our statutory auditors get some sort of a clean documentation without many control failures or design gaps or those kind of things. And another pitfall is people think, some people, let's say, do have an opinion that IFC and ICFR are one and the same things. This will not be the case with people who are professionals. It is generally with companies who don't have mature internal audit and internal control systems. So there is a bit of lack of clarity in those smaller, or let's say mid-sized companies where the structures are not there. And then some companies also adopt the approach of suit the budget for documentation rather than solving the internal control problems. So if you were to look at ICFR or IFC or internal audit, you'll realize that it is a lot of work around internal controls, and you cannot be documenting things and within a budget and then thinking that your internal control problems will be solved. That is not how you take a problem and a solution approach. Then you might have observed in your professional journey that ICFR is reviewed multiple times without many tangible results or improvements coming out of ICFR. Let's say ICFR is reviewed by internal auditors because it has internal controls, risks. Then these are also reviewed by external consultants who are generally helping out management with ICFR documentation or management testing. Then this is also reviewed by statutory auditors. This is also reviewed by management personnel. So you can clearly see there is quite a bit of overlap in terms of the effort that goes out into reviewing the same document. And when you compare that effort to what comes out of an ICFR engagement as a control improvement or a really something of a serious issue with respect to internal controls in an organization, you'll be surprised to see that there are not too many instances of those cases. And one of the pitfalls is also not prioritizing the testing of controls for separate business units, factories within one legal entity. Some companies do also make a mistake, like, for example, let's say you have a manufacturing company which has 5 plants at 5 different locations. Now, if you were to test the same controls for 5 different locations or document the same controls within those 5 locations, your sampling will go high, your effort will go high, and eventually what you will realize is that there are a lot of commonalities in terms of the processes not being there or not good enough to manage those activities at those plants. So there can be a prioritization of control so that you really come up with actual issues. So like I said, another pitfall is not leveraging the risk and control matrices for multiple purposes, or creating a mistake of creating multiple documents for the same controls within the organization. Let's say you would be documenting some of your payroll controls for ICFR, and those controls will also be there if your entity is, let's say, required to do SOX or let's say ISA control evaluations. So there will be a lot of overlap when you look at those controls in details, and that is where, as internal auditors or professionals or as employees of the company, you can come up with ideas to maybe save some man hours or save some efforts in terms of how you design and test those controls on an ongoing basis. And sometimes you will also see that there is inadequate support or focus from top management, or inadequate resources staffing with the chief audit executives. And the internal audit function is typically a lean function. Some of it is outsourced, some of it is managed in-house. So resourcing, so like I said, being resourceful always helps. If you are resourceful, even if you are 2 people in the team or 3 people in the team, you can do a lot more work in ICFR and internal audits. So moving ahead, some of the key definitions and why I have kind of put these definitions is, let's say people generally talk about governance, risk and compliance solutions. So internal audit is one of those solutions which comes within this broad domain, or let's say within this wide domain. Let's say if we were to look at the definition of corporate governance per se, and why I am looking at this definition, if you look at your standards on auditing or the international standards on auditing, or even let's say standards on internal auditing, there are few words which are repeatedly and commonly used in these. And what are these words? These words are communication with those charged with governance. Now, if somebody says, who are those people who are charged with governance? You need to first understand what is meant by governance. Let's say corporate governance, if you were to look at a textbook definition, it says corporate governance involves a set of relationships between a company's management, its board, shareholders, and other stakeholders. Corporate governance provides the structure through which the objectives of the company are set and the means of attaining those objectives and monitoring performance against those objectives. Now, if you look at the underlying idea behind this definition, or the underlying theme behind this, historically, or let's say even today, whenever a principal has to rely on his agents to handle his or her business, there will be governance issues. And that is why this definition is very important, even if you have to get a mandate for doing an ICFR, because your standards on auditing, because your standards on internal auditing require you to communicate with those charged with governance, and they are also responsible for setting up and monitoring the internal controls in the organization. And those internal controls are relevant for your internal audit, for your ICFR work, and even for your anti-fraud controls or anti-fraud measures you want to put in an organization. So I'll just briefly touch upon the standards on internal auditing here, which says dissemination of the results of internal audit and reporting the findings to management and those charged with governance is an essential part of any internal audit. Now, if you were to go back, let's say you're auditing a company which is a private limited company. Let's say in that private limited company, who do you send out your internal audit report to? Those are generally determined by, let's say, your engagement letters, your project plans, your reporting requirements, what you agree with the management. Generally, you will report to the management, or let's say the CFO or the CEO at max. But do you really interact with the people who are sitting on the board of a private limited company? Answer in most cases or many cases will be no. So these definitions are important to just set the context, and you have to look at the standards of internal auditing, SIA 370 also, which also talks about highlighting the effectiveness of internal controls and risk management processes to enhance governance in line with the internal audit charter or the terms of reference, which generally are given in the internal audit charter, or let's say in case of an external service provider, which could be any consulting firm. For above definition, I think the sponsorship and support becomes very important for internal audit and ICFR engagements. Let's say if you would get your sponsorship from the CFO of a company to do the internal audit, or let's say to do the ICFR, a lot of times there could be a possibility that the CFO might be expecting a documentation and a compliance engagement. That is where you have to engage with your stakeholders. That is where you have to engage with your clients to discuss the issues in detail, that how you actually do the meaningful ICFR engagements, or let's say how do you go about ensuring compliance as professionals, ensuring compliance as chartered accountants, or anybody who works in this field. Next comes the definition of a risk. So there are different definitions. Again, why I am picking up these definitions is because whether you do ICFR, whether you do internal audit, whether you do fraud investigation, whether you do a governance assignment, whether you do a consulting engagement, context is most important. I think a lot of times people take risk in a very different way. Risk is something that almost everybody knows, and risk is something that almost everybody understands. But what is relevant is in your scenario, in your organization, with respect to the expectations that the stakeholders have, what is the context that you are setting in? So let's go by a couple of definitions. Let's say ISO 31000 standard is widely accepted. So it defines risk as an effect of uncertainty on objectives. Note that an effect may be positive, negative, or a deviation from the expectations. Also, risk is often described by an event, a change in circumstances, or consequences. A lot of times what you will see is we go by defining risk is as something that can go wrong. That's a negative connotation of risk, something that can go wrong. If you were to ask me, and if you were to give your reply in a one word answer, I'll say what can go wrong. Answer is everything. So if you go by, let's say, the definition given by Institute of Risk Management, it says risk is a combination of the probability of an event and its consequence, and consequence can range from positive and negative. The Institute of Chartered Accountants of India also defines business risk as a risk resulting from significant conditions, events, circumstances, actions, or inactions that could adversely affect an entity's ability to achieve its objectives and execute its strategies, or from the setting of inappropriate objectives and strategy. Now, this is also a very practical definition. Again, you'll have to look at the context. But if you, let's say, you were to be working in a bank or doing a risk evaluation or a risk assessment or a vendor compliance engagement with a bank, you will be defining the operational risk as something very different. It will not be the same definition which you would generally apply in a private limited company. So this definition is important to set the context and expectations. That is very important, that the expectations of the stakeholders, the board of directors, the CFO, the CEO is very clear when you're doing IFC and ICFR engagements. Now, let's say we were to look at the definition of internal audit. Let's say some of the definitions I have put here purely for the reference, because there is a lot of overlap between ICFR and internal audit, because both are about internal controls. So definition of internal audit as given by the ICI is in a standard of internal auditing framework guidance. It says internal audit provides independent assurance on the effectiveness of internal controls and risk management processes to enhance governance and achieve organizational objectives. Again, you will see there is this word called governance which is being used, and it is important to again use it in the right context and use it in the appropriate manner so that all the expectations of all stakeholders are addressed. Now, if you were to look at the definition of internal audit, which is given by the IIA, it says internal auditing is an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. It helps an organization to accomplish its objectives by bringing, now you note the word, by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. Now, if you look at this last part of this sentence, it says risk management, control, and governance processes. Now, this itself is a very wide term, which we'll be touching upon in a later slide, that what all other activities that an internal auditors can really engage in. Now we've understood, let's say, what is internal audit. We've understood it talks about controls, it talks about governance. We've looked at the definition of governance. One of the most important definitions that will be used in ICFR or internal audit engagements is how do you define control? Definition of control, it says any action taken by management, the board, and other parties to manage risk and increase the likelihood that established objectives and goals will be achieved. Now you've read what is risk. It is an uncertainty with the objectives. Now you see what is a control. It is an action taken to increase the likelihood that established objectives and goals will be achieved. Now risk and control both are linked with objectives and goals. Now it says management plans organizes and directs the performance of sufficient actions to provide reasonable assurance that objectives and goals will be achieved. Important to note, in any internal audit engagement, the words used will be reasonable assurance and not an absolute assurance. This is a very important technical aspect that you should be mindful of whenever you are engaging with your CFOs or your chief of internal audit, head of internal audit. Now, it also defines, let's say, what is control processes. Control processes are the policies, the procedures, both manual and automated, and the activities that are part of control framework, designed and operated to ensure that risks are contained within the level that an organization is willing to accept. Now, one question is, what is the difference between a policy and a procedure? This is one question which I almost asked to all young chartered accountants. Obviously, senior people will know the difference very clearly. So the basic in this is, let's say, a policy is what all can you do in the organization. Procedure is about how you do it. So that's the fundamental difference between the two. One says what you can do. Sometimes there'll be procedure and policy manuals, which will talk about both, but generally policies are what you can do, procedures are how you do it. Coming to our main topic for today, ICFR and IFC. So there is a definition, again sticking to the definitions. This definition is given by the Companies Act. It says internal financial controls are the policies and procedures adopted by the company for ensuring the orderly and efficient conduct of the business, safeguarding of assets, prevention and detection of frauds and errors, the accuracy and completeness of accounting records, and the timely preparation of reliable financial information. Again, this definition, if you look at this definition, it also talks about the company which processes financial reporting does financial reporting and prepares the financial statements for external purposes in accordance with the generally accepted accounting principles. Generally, a company's internal control over financial reporting includes those policies and procedures that pertain to the maintenance of records and that fairly reflect the transaction and dispositions of the assets of the company. Again, provide a reasonable assurance that transactions are recorded as necessary to permit preparation of financial statements in accordance with the generally accepted accounting principles, and that receipts and expenditures of the company are being made only in accordance with the authorizations of management and directors of the company. So these definitions are important because whenever you are designing your templates, you have to be mindful of how you are documenting the risk, how you are documenting the control. Again, another important aspect is to go back to Standards and Auditing 315, which says identifying and assessing the risk of material misstatement through understanding the entity and its environment. So these are also very important aspects. Whichever business you are doing the ICFR for or internal audit for, you have to be aware of the environment and you have to be mindful of what exactly you're doing. So we spoke about, there was a word which came in the previous slide, which talked about a framework. So now one of the globally accepted and most widely used frameworks for internal control is the COSO framework. It has 5 broad parameters and it also defines internal control. It says internal control is a process affected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of objectives in the following categories. First, effectiveness and efficiency of operations. Second, reliability of financial reporting. Third, compliance with applicable laws and regulations. Now, this framework we generally use, even the guidance note of ICAI talks about these parameters whenever you have to do IFC or ICFR engagements. We'll discuss these parameters in detail, and this is something which is not new, I would say. If you've been auditing, let's say you've been doing stat audits or any other audits or even internal audits for that matter, you'll realize that this framework, even though a mention of it came in the guidance note back in 2015, by the ICI, this has already been, let's say, adopted and used for your audits. And I'll tell you how it is used and where it is used. So let's say if you are a chartered accountant, you would be aware of SA 315, which was first issued by the ICI in February 2008. Now this SA 315 talks about five components of internal control as they relate to a financial statement audit. And what are these five components? First is the control environment. Second is the risk assessment process. Third is the control activities. Fourth is information system and communication. Fifth is monitoring of controls. And if you go to the COSO framework, all these five elements are the parameters defined in the COSO framework. So this COSO framework has been in use as early as 2008 or even prior to that with respect to stat audits in India. How much of assessment happens, documentation happens, I will not comment on it, but this has been a requirement by the Standards on Auditing 315 that the auditors have to make an assessment when they are commenting on the reliability of the financial reporting. I'll not go much into the detail of the technical aspects of standards on auditing. What I will do is just take one or two examples to simplify what all textbook definitions we have read. And I take this example quite often with mostly with the young chartered accountants, or let's say people who come to me for articleship or any sort of training that I do. Let's say if I were to show you this chair, and if I were to ask you that suppose you have to sit on this chair, what is the risk you perceive while you're sitting on this chair? A lot of people will have common answers. A lot of people will think about risks in terms of even going to the extent and saying falling from the chair, breaking or hurting my back, and those kind of negative connotations which you will generally come up with. Now, if I were to just replace this chair with a sofa and I ask you the same question, if you were to think about a risk, if you have to think, sit on this sofa, I'm sure a lot of people will already be thinking something bigger as compared to the chair example. But in both the cases, the context is the objective. Why I take this example in terms of risk is, let's say if you were sitting on a chair and somebody asks you risk and you immediately go to thinking about negative connotations, I'm sure you have not thought about the objective. Why you are sitting on chair, that is your objective. If your objective is to test the strength of the chair, then those negative connotations are absolutely right and would be the key and primary risk you have. But if your objective of sitting on the chair is to do something, and that objective after sitting 1 hour on the chair is not met, then that particular thing will be your biggest risk. I think this is one common day example which I could give to you, and there could be 50 more examples which I can quote from everyday life, but we are short on time, and maybe we'll take up those examples sometime later. So the key message on that chair example was not to lose sight of the context. The objective in business is very important. Most of your risks, or majority, 80% of your risks, top risk, will be your objectives not being met. 20%, let's say, not being met on time or delay or some inefficiency on those process. So if you were to do a simple 80-20 analysis, if I were to show you another picture and ask you a simple question, now do you see risk, reward, challenge, and opportunity and controls within this one particular single frame? Now you see there is a risk which a particular mouse has if he has to get the cheese, which is a reward that he's chasing. The challenge is it is set up in a trap. The opportunity is he can get that cheese because it is available. What is the control on both sides? Trap itself is a control because the mouse itself is a risk. It can destroy or it can cause plague or whatever disease it can cause. And you just correlate the two and you'll be able to see that there are controls on both sides of this picture. there is a reward, there is a challenge, there is an opportunity, and similar is the approach that you take whenever you are doing a risk and control evaluation. You have to be mindful of the environment. You have to look at what is the risk, what is the context, what is the reward, or what is the measure that the organization has taken to evaluate that objective. So you'll always come up with things which are qualitative and quantitative. Now another question: can you anyways reduce the risk to zero? The straight answer to that would be no. Reason is, if you've looked at the previous examples, risk is something which you can minimize with internal controls. And beyond a point, why risk cannot be zero is because the risk will transform. Let's say you have risk of losing money when you're doing a business. Now you close that business. You'll not be losing money or you'll not be burning cash. But there'll be some other risk which will arise while closing that business. So risk has this tendency of getting transformed from, let's say, activities, and as we read in the previous definition, action or inaction. If you're doing an action, you might be increasing or decreasing the risk. If you are doing an inaction, then also you might be increasing or decreasing the risk. So to sum it all, what we have discussed, what is most important is that whenever you are doing ICFR projects or IFC projects, it is important that you differentiate between IFC, which is internal financial controls, and ICFR or ICOFR, which is internal controls over financial reporting. We've seen in that COSO framework, IFC also includes your operational controls. ICFR is strictly related to financial reporting requirements and controls relating to those. It is also important that you evaluate the legal entity and the operating structures to assess the applicability of whether it is IFC which is applicable, whether it is ICFR which is applicable, or it is a small company in which you don't have to make those assessments as per the requirements of the ICI. Then it is also important to understand the applicable provisions, the compliance, and most importantly, the COSO framework and the guidance note issued by the ICI. And also evaluate specific governance, risk, and compliance requirements for IFC, ICFR. We've already discussed that multiple standards, multiple places, the words which are used are those charged with governance. How do you communicate the results of your ICFR engagements? That is also very important. Even if you were to document the ICFR and give it to the financial controller, will it ensure that you've done compliance on your part? Maybe with respect to if you have classified those in your engagement letter or in your, in discussions with your team within the company. Now, determining the objectives of documentation and evaluating the extent of coverage. Now, internal controls, as you've seen, it's a vast topic. It touches almost every corner of the organization. It is important to understand and document the objectives first. Even if you are beginning a project, if the objectives are not clear, you are liable, or let's say there will be a situation where some of the stakeholders are not happy, or you don't come up with something which was actually desired. Then evaluate the management responsibilities and auditors' responsibilities with respect to the reporting requirements. Reviewing the existing policies and procedures and systems in place. Why? Simple, because the definition of IFC is a wide definition. It covers all three. One area where you can add value, which is more like a low hanging fruit with respect to IFC and ICFR, you can plan to integrate IFC, ICFR, and internal audits, because both have a lot of overlaps, lot of controls, risks which are common, and you can take this up internally in the organization, because that will not only save the cost for the company but the efforts as well. And work out a customized plan for the assessment and testing of controls to ensure that the compliance to the applicable provisions is ensured, and to ensure that the stakeholder expectations are met. Then also agree on the approach and methodology with the management as well, with the stakeholders and with the statutory auditors as well. and make sure that you leverage the internal audit testing procedures. If you build your ICFR, let's say something which is first time applicable to a company, and then you go on and do internal audits, trust me, your internal audits will be far more efficient and fruitful, because you would know what are the top risks, you would know what are the high risk areas, you would know what are the areas where the controls are not those efficient or the attributes are not well defined, and that is where you can do a deep dive in your internal audits and come up with valuable suggestions. Use standard templates to address multiple requirements. Like if you were to look at ICFR templates, those can also act as internal audit programs, those can act as risk and control matrices, those can act as design assessment templates, those can act as evaluation of, let's say, can be used for evaluation of anti-fraud controls or fraud risks within an organization. So it is important to, uh, use templates in a way that those can solve multiple purposes, those can address the requirements of multiple stakeholders, because every control that is implemented in an organization is a cost for the organization. Even if you are drafting a policy and setting up and rolling out a policy, drafting the policy itself is a cost in terms of the time and resources that goes into it. Implementing the policy is also a cost. So it is important to optimize the cost of compliance, be it internal audit, IFC, ICFR, and internal controls. So what is most important is to have a project plan that works for your organization or your client. So Anurag will be sharing a template with you and discuss how you can design or define your project into different phases, what are the steps that you can take, how you can create a sequence of steps so that your particular objective of internal control or IFC or ICFR or internal audit is met, and you are able to close that out easily with your stakeholders and solve the purpose of that. Over to you, Anurag.
Yes. So all of you. So the IFC starts with the design phase, as is listed. Phase one is designing the controls. So that basically means that first of all, identify the key processes, and then identify the risk in those processes, and do a process walkthrough, understand the process, and then document the controls which are there to mitigate the risk. These are basically the as is controls. So and the deliverables that come out of after this phase is the risk and control metrics, the RCM, that is, and the process flow charts, which list down the detailed process in the template of a flow chart. So basically, it is an easy to understand kind of a easy to understand document. This is sometimes a client deliverable, sometimes it is not as per the engagement. And after that, we also have like a design gap report, or the list of design gaps. For example, if there is no control, no existing control for a risk, then it's called a design gap. Or if there is a control but it fails, at the first sample or at the design level, then it's also a test of design gap. It's also known as a TOD, test of design gap. So that's basically so even this first phase is the test of design. So it basically means the testing, the documentation of the as is controls, and the testing of the design of those controls. Then comes the second phase, which is the testing. Now the controls which you have already drafted in the design phase, now these controls are tested in the second phase. So, and now the main questions you might have is that what is the frequency, of what is the sampling methodology, or how much sample should be taken. So the sample is dependent on the frequency of the control, and it's as per the ICI guidelines. So, for example, if it's a key control and it's multiple times daily control, uh, it happens as needed. So then we have to take a sample of 40. And if it's a non-key control and multiple times daily control, then we have to take a sample of 25, and so on. If it's a monthly control, we have to take a sample of 3. If it's half yearly or yearly control, we have to take a sample of 1, and so on. It's strictly as per the ICI guidelines what most companies follow. So these are like the sampling methodologies for the testing of these controls. So you already have documented the control and the frequency of control. So now you will be able to assess the sample size, what you need to test, and accordingly you need to ask for the data, which is called the initial data request or the IDR. So you start off with the IDR and defining the test steps and what attributes you need to test. And after you get the data, you complete the testing, and uh, uh, you share the results of those testing in the form of of control testing sheets. And there is also a kind of a gap report that comes out. Uh, these are the operating gaps or the test of, this is called the test of effectiveness, so TOE. So in the first phase, it was the test of design gaps. Now, whatever whichever gaps or whichever controls are failing at the design level, we don't test them because they are already failed in the design level. For all the other controls for which we are testing, uh, it can be either a pass or it can be a fail. So for all the failed controls, like for all the controls, we prepare a testing sheet, but for the failed controls, we make a exception report and hand it over to the management and discuss with the relevant control owners. And then comes the third phase, which is like the operating effectiveness. Now, this is moreover related to the control self-assessment or by the control owners. So it's basically the control owners, they themselves assess that if the controls are working fine or not, and also the work on the remediation plans or the recommendations suggested in the for the failed controls in the phase 2 testing. So this is basically the way how to approach an IFC. So again, coming on to the approach that is required. So as a step number one, you need to understand the business, the industry, whatever industry your client is. You need to have a basic understanding to understand what processes are most critical for them and which are the critical risk in that business. Then check the applicability of ICFR and IFC, and then formalize your agenda or put an agenda and list down all the major processes that you are going to be doing. Then listing out all the risks which are applicable to all those processes, and also you have to get it validated by the management about the risk that you are going to be that you have identified and what you are going to test. And then you understand the org structure. First of all, while after all this has happened in the background, first of all you will while starting you will have to ask for the SOPs or the policies or the standard operating procedures that the that the company is following. that will by that you will be able to get a good understanding about the processes followed in that particular company. Then you prepare a checklist and you list down all the risks. Then after understanding the process through the SOPs and the policies, you need to conduct a walkthrough, which basically is that understanding the flow of activities with the help of a sample, and collecting the documents. And this is very important point, because this is important for understanding the process, and how the process is implemented practically. Sometimes it so happens that there is in SOP has listed down certain steps, but in reality, it's a little different. So that is how walkthroughs become very important. Then after the walkthrough and basis the walkthrough, you will be able to list down the as is controls, or document the as is controls within the organization. Then after that, you will have to benchmark those controls and see if those controls are sufficient, or they need more controls or some better controls. And then, as we say that, in the process, you will also be checking the design test of design. So, and therefore you will be getting the design level gaps, and whichever, as a next step, you will be testing the as is controls or the listed controls, and then you will be sharing the recommendations in the form of the gap summaries, be it the test of design gaps or the test of effectiveness gaps with the management, uh, as was discussed in the earlier slide also in the deliverable section. So that is basically about the approach that you need to have. So again, I would like to say that the most important thing is the most important thing is the walkthroughs. Walkthrough should be very detailed, and the more detailed your walkthrough is, the better process understanding you will be able to gain.
Move ahead.
Yeah, yes, yes. So, Deep, if you can open just open the template.
Yeah, just a second. Is
Yes.
it visible?
Yeah, it is visible. So, as listed above, the project phases are planning. First phase starts with the planning, in which you list down the scope of the audit, whichever processes you are going to cover in the IFC, and then starts the fieldwork. Fieldwork here, it's given tentative 4 weeks with 2-3 resources. Yes, it's generally like that, but it depends on the business also, that how much time and resources are needed. And this in this step, you do all the field work which was discussed, which I have already discussed also, right from understanding the policies and SOPs to doing the uh, uh, framing the internal controls after doing the walkthroughs, and all of that. And then the last phase, as a last phase, is the report issuance, which is also like kind of divided into two parts. First is the test of design or the design gap report, that you give to the management, and then after the testing happens, you have to give or you have to share the test of effectiveness failures with the management. So
So this is a detailed program which you can use, which is available freely for download, or Anurag can share it over an email to you. It has all the steps which you typically would need to do, how you plan it, how you execute it, how you close out the project, and what are the specific deliverables which will be there at each of those steps or phases. What I've tried to capture maximum in this. In case you feel there is some other expectation which pertains to your particular organization or client, you can always customize this plan or add those steps to it, and take it forward with respect to your requirements. So we move on to the presentation again.
yeah,
So this was the template that we discussed. So moving on, looking at ICFR beyond compliance, and Anurag will brief you on this.
yes. So what happens? What practically happens is that some of the companies they look at an IFC just as as a tick in the box compliance activity. So that is something which should not be done as an if an IFC is done in the right spirit, then you will have all the controls detailed out for all the risks, and it's a huge opportunity for cost saving as well as revenue enhancement in a way. So uh, what it actually does is that it strengthens the control environment of the company. It gives an assurance to CEO and CFO that the business is performing well, so that they can sleep peacefully. And also, it is used as a base for some of the controls that has to be built in the ERP. Uh, uh, and eh, we can also look at process redesign, or sometimes I was working in a company and there was no there were no SOPs defined for the processes. So just when while they took this activity, the IFC activity, they decided that they wanted to detail out the SOPs also. So this can also bring out newer things which can improve the process and strengthen the controls in an organization. So, and also automate the even more important point is automating controls. The more you automate, the more risk-free environment you work in. So that's basically why I feel that compliance, it is important to look at ICFR or IFC beyond like just a compliance and just a regulation in the Companies Act to fulfill. Yes, if we can open this template.
Yeah.
So the template, it starts with the process and then the sub process, and then we have all the risks which have been identified, and then we have fields like the control objective, the as is control, and the testing methodology, the risk assertions, the risk rating, risk classification, that is high, low, medium, and all of that. So this is by far uh, uh, one of the best the templates that I have seen. Like some people, they believe in making very, very large templates which have like 35, 40 columns. But that is actually not required. All the relevant things, all the relevant information which is required is there in this template. Uh, uh, like the risk classification, whether it's a fraud risk or not, those things which are important, and the as is control, which has been there to mitigate the risk. So this is there. So Deep, one of the basic questions that most of the students face a problem in are the risk assertions. They really get confused about which risk assertion should be applicable in which control. So if you could just briefly explain to all of us, and clear this confusion.
Sure. What I will do is I will just take you through this entire template in just about 5 minutes, and whatever we have discussed, how it is practically applied in this. So we already looked at the definition of risk. We are saying it is uncertainty attached to the objectives. Now, if you were to look at a simple fixed asset plant and machinery process, you will find that there are sub activities or sub processes which are there, which starts off with acquisition of asset, receiving the asset, doing the coding classification, capitalization and accounting, then some repair and maintenance happening on those assets, and then some spares consumption, which is natural in wear and tear of the assets. And then you do the accounting and depreciation on assets, and there might be scenarios where a disposal, sale, or transfer from one unit to another unit would happen. And then there is a process of physical verification of the assets, right? So first, then comes the risk part. So we already understand what is risk. So you identify the objectives with individual activity, and then you look at what is the particular risk in that activity, and then you document your risk statement. Again, keep in mind the chair example. You have to not lose the context. Here you can also use an approach where you can say what can go wrong in that particular process or activity, because this is something which is coming out of the guidance note or the annexure to the guidance note of the ICI, which says documentation of internal financial control. They have given a very elaborate document, and there is an appendix to it which lists down a lot of risks. So what I typically do in these sort of assignments or projects is I club those risks at an impact level. Let's say if you were to look at a physical or let's say fixed asset acquisition. Now either your requirement analysis is incorrect, or your expenditure is not done in a timely manner, or it leads to a delay in acquisition. Either ways, the impact will be either you will do some inappropriate expenditure, or there will be a negative impact on the production for which the asset is being used. So using this approach, you can actually club 2 or 3 risks with a impact on the objective. That is where you can rationalize your risk and controls as well. Now a fixed asset process here has, let's say, 11 risks. There could be 22 risks as well. There could be 30 risks in this as well. But what is important is you're mindful of what the guidance note says and what the organization expects out of you. Now, risk classification, you need to have a criteria. What is a high impact risk? What is a medium impact risk? What is a low impact risk? Let's say thumb rule is if it defeats your objective completely, it is a high risk. If you are able to meet your objective, but partly meet it or meet it with some delay, or let's say inefficiently meet it, it is not 100% achievement of the objective, but let's say 80% of the objective, you say it's a medium risk, depending on how much impact or financial impact there will be on the organization. Then a low risk could be the objectives are met, but with only some improvement opportunity with respect to the procedural aspects, or there could be some efficiency improvement. That is how you can, design your own risk classification criteria, or use the guidance which is given by ICI or Institute of Internal Auditors or any of the consulting firms, big four firms you might be working with. Then comes the as is process to mitigate the risk, or the controls to mitigate the risk. So we've already seen the definition of what is control. Now stick to the definition and ensure that all the items in the risk are, addressed with respect to whether those controls are systemic controls, whether those controls are policy, procedure, people, process, technology. You can bifurcate between the three. Now, risk associated with control. This is a requirement which is given by the guidance note of the ICI, and the classification criteria is also given in that guidance note. You can also map this, whether the risk associated with the control operating effectively or not effectively, it is higher or not higher. Then comes attribute to be tested. Now, we've already discussed, leveraging the same template for multiple purposes. And this column becomes most important for you when you have to leverage the template. Let's say if you were to do it purely for an ICFR engagement, you just define the attributes where you see a financial reporting or a compliance risk, because that is your ICFR requirement. Now, if the requirement is for an IFC, you can keep those risk statements as at an impact level, but you can enhance the attributes and include the operational aspects so that those controls also have the operational attributes attached to those when you're testing those controls. That is where you can translate your ICFR into IFC, and these attributes can be linked directly to the COSO framework or the 5 broad parameters. You can add attributes with respect to policy, delegation of authority, or let's say a systemic control or other control activity or monitoring control or information communication. Around those 4 or 5 broad parameters, whatever becomes applicable in that particular organization or scenario, you can always enhance the attributes. Now, these attributes, again, if you were to do an internal audit on these, you would need all these operational reporting, financial compliance attributes. Let's say you were to evaluate fraud risk in this, then you would need some attributes which give an indicator what are there any anti-fraud controls there, or is the environment or the particular activity susceptible to a fraud risk. That is where you can again further enhance the attribute. So Anurag also spoke about key and non-key uh, controls. Just to briefly give you an idea, this template also talks about key and non-key, and it talks about financial and non-financial. So if at an impact level there is no financial impact with that control failing, you would say it's a non-financial control. An example could be some monitoring MIS which is being circulated, let's say on a monthly basis, which is not used for, let's say, financial decision making, or let's say has no impact with respect to financials. That could be a non-financial control. And what is a key control? Key control is that control which must operate effectively to reduce the risk to an acceptable level. Now, what is that acceptable level? That acceptable level is determined by whether you are defining risk appetite with respect to each of the risks you have identified. Now, for ICFR, we generally don't define the risk appetite and all. But if you were to do a risk and control matrix or define a risk register, further enhance this template, you can always come up with risk appetite into this. And you can also map the KPIs of that particular activity or the control executors or control reviewers in that activity and take it to the next level. Now comes the question of assertions. What are these assertions? Why these are relevant? These assertions are most important. Let's say if you were to assess these controls, on what parameters do you say that this control impacts my financial statement or it does not impact my financial statement? Let's say existence with respect to balance sheet, occurrence with respect to P&L, and completeness with respect to balance sheet and P&L, valuation with respect to balance sheet, allocation with respect to P&L, rights and obligations with respect to balance appearing in the balance sheet, and then presentation and disclosures when it comes to financial statements. Now, what does the existence says? That the assets and liabilities on a particular balance sheet date are in existence, whether this particular control will impact those or not. What does occurrence say? Occurrence say that whatever transactions happen in a particular period, those are recorded in that particular period, and expenses or let's say incomes are coming in the P&L with respect to that period only. One of the most common examples is, let's say, whenever you are reviewing the cutoff control. Completeness says whatever items that are appearing in the balance sheet and P&L, all transactions have been included. It does not have part of the transaction which is not included. What does valuation says? That the assets which are stated in the balance sheet or the liabilities which are stated in the balance sheet are valued properly. And what does the rights and obligations say? It says that the assets which are appearing in the balance sheets are rights of the entity, and the liabilities which are appearing on the balance sheet are obligations of the entity. Then what does the presentation and disclosure say? That whatever disclosures you are making in those financial statements, those are as per the generally accepted accounting principles. So we've gone through the definition of internal control over financial reporting and IFC, and we've seen that the word generally accepted accounting principles come in repeatedly. So this template is extended to say whenever you are evaluating controls on certain parameters, do you see any design gap or improvement opportunity on those? And once you've seen the design gaps, you say that there are no design gaps, then you determine whether the control is effective or ineffective. Now next comes the internal control component. These components are straight away taken from the definition of IFC, which is given in the Companies Act. And what are those 5 parameters which are given in the Companies Act? First is the policies and procedures, safeguarding of assets, prevention and detection of frauds and errors, accuracy and completeness of accounting records, and timely preparation of financial statements. What is the nature of control? Is it a preventive control or a detective control? Is it an entity level control, or is it a process level control, or it is an IT general control, purely a systemic control? Whether it is manual, whether it is fully automated, whether it is semi automated, what is the frequency of that control? Anurag already spoke about. Are there any fraud risks associated with that particular control or that particular activity in the organization? You can map those, you can identify your parameters on which you can evaluate those anti-fraud controls. Then information produced by the entity. Now, if you go by the guidance note of the ICI, this will have 3 aspects. Information produced by the entity which is used for operating or operation of the control. Second IPE is which is used by the internal auditor to assess the design or operating effectiveness of that particular control. Or let's say which is used to do a substantive testing on those controls. Then you map what application system is used or what application is used. Is it Microsoft Office or some ERP or any other legacy system that the organization is using, or any in-house system which is being used for processing of that particular control. This will also determine whether you have a manual control or a semi-automated or a purely IT-driven control. Then you have the control executor, reviewer, sampling size, test results, and conclusions. And then you see the residual risk rating. If the controls in place are mitigating the risk to an acceptable level, your residual risk rating will be lower. You have a risk which is reduced to an acceptable level. And if there are some exceptions, you discuss those exceptions with the management and you take an action plan on those control failures or design gaps. So this is about the template. You can always customize and innovate on this template. This is a very basic and template which captures the essence of the guidance note which is given by the Institute of Chartered Accountants of India. Even though this template is not recommended by ICI, but if you go by the guidance note, this captures what the guidance note requires, and you can improvise this or build on it further. That is to solve the agenda that you can use one template for multiple purposes. Now going back to the presentation, uh, we've already shared that template. Anurag can mail it to you. You can have a closer look at the template. You can improvise it, or if you need something which is specific to your business, where you need a different solutioning, that is where you can uh, improve it. Next section of our discussion today is proposals. Let's say this is typically relevant to people who are working as consultants or young chartered accountants who are wanting to move into their own practice, or any person who's working on a freelance basis, or even for people who are wanting to become managers and get into the business development part in their organization. So there was one recent survey which was done by the Institute of Internal Auditors, especially I think during April 2019, during this COVID time. And what that survey talks about is, for the internal auditors, most impactful activities, and this survey was included 2000, more than 2000 respondents, and it says most impactful activities observed among those respondents for internal audit have been: first, updating the risk assessments; second, carrying out audit projects; third, creating awareness of key controls; performing research and benchmarking; performing essential first and second line tasks and processes. Now, why this is relevant? If you were to take an internal audit or an ICFR activity within your organization, lot of people, or almost every company I know of, is struggling, or I see on LinkedIn or social media, everybody is struggling with COVID-19. Now, do you think that people will be focusing on compliance to a policy, or the policy itself will undergo a change because the whole dynamics of how you work in an organization have gone for a change? And that is where, again, I go back to my previous slide. I say context is most important. Whatever was relevant prior to COVID may not find the same context or same, you know, ask from the stakeholders post COVID. Lot of expectations from internal auditors, lot of expectations from internal control people, lot of expectations from internal audit managers have already changed. So another recent poll says that a lot of people, a lot of companies have reduced the scope of internal audit engagements. They have cancelled some internal audit engagements. They have redirected their audit staff to non-audit work. Like, I have also been working on one client where I was doing some work, audit work, and that client then engaged me for a business planning activity. So how do we plan post this COVID scenario? What is the uncertainty that is there? That is where your work for risk evaluation, risk assessment becomes more meaningful, because the risks that were there 5 months ago are no longer the top priority. The top risk for every organization is COVID-19 right now. And the fallout of that is revenue of every company is impacted. HR people of every company are impacted. The supply chain of every company that you would see is impacted. And most people are fearing that there could be another pandemic which could be of a similar nature, which could have an impact, or this pandemic itself could spread. So what I'll do as a next step is take you through a generic table of contents for a proposal. What you need to do is a brief introduction about yourself, addressing the opportunity, understanding the needs, and what are the perceived problems and solutions to those problems. Then how do you approach for the solution, and what are the key success factors that will make sure that your project goes through. And you need to have a project plan, the deliverables, the timelines attached to each of those deliverables. Then you need to also showcase how you will execute, what is your approach, what will be your methodology, and something about your team structure, roles and responsibilities, who will be the project manager, who will be the part of the execution team, who will be the point of contact for escalations, then commercials, and you summarize the whole proposition. And if you have some credentials, or some companies they do ask for credentials, that what is the similar nature of work that you've done, you can always share those, subject to your own comfort level. And then some of the key factors that I've listed down, which I generally take in and discuss these upfront with clients. Let's say you have the resources and infrastructure for support. If you are going for an internal audit work and the process owners are not there to support you, or you don't get the information or infrastructure that you need, you will not be able to complete your project on time, or as per the expectations. Factor two again goes back to the context. There has to be a common understanding. If you understand something with respect to internal controls because you are a very technical person, and the client is not a technical person, you he understands internal controls and internal audit in a different manner. There is it is very important that you come up with a common understanding so that both parties understand the same thing in the same essence and same context. Then third factor I see as most important is the roles and responsibilities. And these roles and responsibilities goes both sides of the table. The client also has a role to play in internal audit and ICFR engagements. If you don't get the policies for review, if you don't get the data for review, you'll not be able to do your work. And your responsibility will be to do your job proactively, communicate with the client, or whatever problems you are facing, you address those problems with the clients. Then teamwork and no conflict of interest. It is very important to have a team which thinks in a uniform manner, and there are no conflict of interests within the team or with the stakeholders. Then you need to have a plan and you have to execute as per the plan. So plan is not something which is written in stone. It is always typically in internal audit. It is always subject to change and improvisation as you come across new facts, new data, new insights into the business. And also one thing which is most important in projects is transparency. That with respect to the team, with respect to the client, with respect to the stakeholder, you can't be in a situation where the chief of audit executive wants certain information to be shared or observations to be reported out, and the CFO does not want those observations to be reported in the IA report because the statutory auditors might make a noise. That is where you have to come up with uh, firm commitments on both sides, that what will be the level of transparency. And as auditors we have to always maintain professionalism. We can't just drop an observation. At least I have not done that in my career. I've never dropped an observation. So whichever way that has to be communicated transparently to the relevant stakeholders. Yes, you might in a scenario come across situations where it's something which is highly sensitive as an observation. You need to find an appropriate channel to communicate it. And like we have seen that all the standards say that those charged with governance, it is important to communicate with those charged with governance and to put your point across and do your job in a professional manner. So this template for proposals is also available for download. It's a sample template. You can download it, improvise it. It is just for an idea or just for an ideation. You can build on it, you can use it. And there is a concept note on ICFR, which is a much more detailed topic. I would say we are short on time. That is where we have not extended this to anytime further. And that template or approach note, concept note is also available for download and your reading. And then looking at a broader role for internal auditors. Internal auditors can work in different capacities as an advisor to the management, as an insight generator, or as an assurance provider. Whatever we've been discussing today is more on the sides of internal control assurance or risk assurance or compliance with respect to ICFR. You can always go one step ahead. Let's say you were to talk about corporate governance as internal auditors. Now, if one of your clients were to discuss with you the topic of those charged with governance, and you were to ask your client, what are the three documents pertaining to governance in your company, then as an internal auditor, you can always look for those documents. To give you an example, a board charter could be one of those documents. Audit committee charter could be one of those documents. A CSR committee charter could be one of those documents. A delegation of authority could be one of those governance documents. How task or decision making is delegated. You can also do a lot of work on risk management. You can also do a lot of work on business continuity, business resilience, especially in these times of COVID where everybody is talking about being resilient and being resilient and those kind of things. You can always generate some insights. You can always look at business models of your clients. You can always do an audit around culture. You can always do an audit around strategy, performance, enterprise risk management. You can always do an audit around IT, social media. You can always do an audit around sustainability. You can also do work around fraud, data analytics, third party contract assurance, and many more things which can be under these three broad items. And the objective would be value addition or value protection through your internal audit work, which essentially revolves around governance, risk management, and controlled processes, if we were to go strictly by the definition. And then there are some useful links. You can always visit coso.org. You can always visit Global IAA website. There is a lot of tons of thought leadership on these sites. And one free resource which I find very useful, at least in the Indian context, is a knowledge bank website given by the ICI. It is kb.ici.org. Most of the things, or everything, almost everything, is free on this website. You can download, you can look at the thought leadership from IIA. You can always share your feedback or your queries through WhatsApp. We're always happy to help. If you have any questions, we can take your questions. I think this was the agenda for today. And if you are having any questions, please feel free to write those in
Yes.
the Zoom chat box, and I'll be happy to answer those.
Thanks, Deep, for this presentation. I have one question. Like for example, now with this COVID situation coming in, there are a lot of travel restrictions, and plus many people might not want to travel. So if you are doing a manufacturing client or a manufacturing assignment in which there are like different plants in different parts of India, uh, and you are asked to audit certain processes in that manufacturing for that manufacturing unit or that manufacturing company, then how do you go about with the process walkthroughs and the process understandings and and all of that?
See, there are two ways. So this is a very typical problem. Let's say, to give you an example, whatever organization you are auditing, they would not, or let's say majority or some of those will be doing this audit for the second time. First time in the COVID scenario, but they would have done it previously. You can always leverage what work has been done previously, rely on those reports, get into discussions, and in terms of doing a system walkthrough, you can always do it remotely. You can just talk to the IT team of that particular organization. They can take you through the system through their login, take screenshots, and give those to you remotely. So those sort of things you can easily do. But when it requires that you have to do a discussion or something, you have to physically verify. Let's say one control is physical verification of inventory. Now you cannot do a physical verification sitting on your office, right? You have to go there, you have to identify those particular things, you have a listing. So those controls, again, you can prioritize or figure out a way how you can do it. And some of these controls, which like you mentioned, there are non-key controls. You can always adopt an approach where you can say, go back to the client and say, whatever people are sitting in the organization, which are your people, ask them to give a self assessment on those controls, and let us look at those self assessment and see how correct those are or how transparent those are. And then you can, define your audit procedures accordingly. But for the design walkthrough, you can always read through the policies. System walkthroughs, you can always go through remotely with the application, discuss the application controls with the IT person. He can remotely, take the screenshots with his login, share those with you, and you can use your experience to, judge those controls. I think large part of it, if you break it down into an 80-20, I think remote audits can be done easily. To give you one example, just last month we did audits of bank branches, and majority of the work we did remotely. All of our data was provided to us. What we had to do is something which needs to be checked on a financial or a banking system. We were given access to nearest branch for one day so that we can go in non-peak hours to those branches and conclude our assessments. So wherever there is some conclusion that needs to be drawn and that requires a physical visit, you can prioritize or deprioritize that. Otherwise, a lot of data analytics can be done remotely. A lot of evaluations can be done remotely. You can leverage, like I said, leverage your ICFR for doing your internal audits, leverage your risk and control matrices, leverage the previous audit reports, and then do the Zoom discussions with the process owners, and they can share those walkthrough documents with you. So that is how practically you can approach it.
Sure, thanks. Thanks, Steve.
Any other question anybody has?
Hi, Deep.
Hi.
Hi. So we have one question from Mr. Rajdeep,
Yeah.
that are the requirements of IFC and ICFR mandatory, and what will be the risk rating for such requirements?
See, these requirements are guided by the Companies Act. So there is a criteria which is given,
Mm-hmm.
which depends on turnover and borrowings. So if you are a small company with a turnover of less than 50 crores, then these requirements don't apply. But if you are a company which has borrowings which are greater than 25 crores or turnover which is greater than 50 crores, then these requirements do apply. And the risk rating, I think there's no criteria for risk rating as such. I would say if you were to rate the requirement per se as a legal requirement, you'll
Uh-huh.
have to look at the penalties which are there in the Companies Act. So there are specific penalties which are laid out for non-compliance to the Companies Act requirement, and there are some generic penalties as well. But I think government has been lenient on some of those requirements, so to say, and they've come up with certain circulars that whatever delayed compliance that companies are doing, they are allowed an extension of time to do those compliances. But more important than the compliance aspect is that the responsibility of directors with respect to internal audit or with respect to internal controls or risk within the organization, I think there is no discount on that, and those responsibilities are enhanced, so to say. Just to give you an example, in this COVID scenario, internal control framework and your ICFR requirements, they will all talk about control activities, and they will all talk about control environment. Now your environment has changed, your control activities have changed. Most companies, or majority if not all, have most of their workers working remotely, and for 6 months, 3 months, there are a lot of new risks which are arising out of working remotely, be it with respect to data privacy, be it with respect to information sharing, be it with respect to insider trading, with respect to, let's say, public listed companies. So you will have to judge those requirements in individual scenario. As far as the Companies Act is concerned, the requirements for ICFR are unchanged, I think, since 2015 or 16. Those remain the same, but the responsibilities of directors are enhanced purely because of the risk landscape that has changed, or the control environment or the control activities that have changed in almost every organization due to this COVID. I hope
Sure.
that answers your question.
Yes, Rajdeep, I hope that answers your question. Uh, I have one more question on my private box, that you told that you need to customize your templates for the policies and drafting the proposals. So, any specific points that you should consider when you're doing so,
I think
when you're
most important,
customizing the
yeah,
policies? Yeah.
most important point is the context.
Mm-hmm.
Like every organization is different. There
Okay.
are different people, there are different policies, there are different procedures, there are varied systems. Even if you were to look at 10 companies who have implemented SAP as their main accounting ERP package,
Mm-hmm.
or majority, if not all 10 of those would have implemented at a different level.
Correct.
Some would have matured it to a greater extent. Some you might even find they are using it as bad as Tally. So you will have to customize. So I think most important thing is, customize with respect to the context. What is the expectation? What does the stakeholder want? And then customize. Because at the end of the day, whether you are working in a company or you are a consultant, what is most
Mm-hmm.
important is what does the client or the stakeholder want, and what is good for the business.
So
If the
true.
business requirement is not clear, a lot of times I've seen even chief audit executives, One time it happened is there was one person who came up to me and said, the promoter of our company says the governance on this company is 2 on 10.
Mhm.
I asked him, what do you mean by governance? How do you demonstrate that? And that senior person did not have the answer. So you have to have the context every time. Without the context, most of it is paperwork.
So true. And I think understanding the requirement of the client and understanding their scope of work, that forms the base of, I think, drafting any proposal or any policy for any business.
Absolutely.
Yes. So, really well put, Mr. Deep. It was actually the apt answer. Okay. So, any more questions, anybody? There's one more question. Have you seen ICF and ICFR being automated with any ERP?
Not with respect to ERP, but I think this can be easily done. If a lot of companies you would see they are running compliance on a self-assessment mode. Uh, I would not say there are a lot of companies who have automated. Big Fours have these tools. I think EY has a very good tool, which is I think Risk Manager or something. They have automated this ICFR. They come up with these standardized matrices and all. You can always do that through a web solution. I think this is something easily doable wherever you have companies who are running compliance on a self-assessment mode. All you need to do is just modify your template to make it into a self-assessment template, and
Mm-hmm.
then upload it on the same compliance portal, and everybody can be doing it. I think this is one solution which is very easy to be doing, and this is one where you actually save cost for your organization. So a lot of companies or consulting firms, they charge a handsome amount to clients just to visit their let's say properties or offices to do these ICFR documentation and evaluations, while majority of the work can be done remotely. And if you have an IT tool to do it, I think this can be done. And as far as linking it to the ERP, I've seen ACL being integrated with SAP to throw up constant alerts wherever there are purchase order exceptions, policy exceptions. I think there is no end to the automation. I think you can soon be seeing people using bots where you are having policy parameters being automated, and whenever there is an exception to a policy, an email will go to some XYZ in the organization. Those sort of solutions are already coming up. Large firms are investing heavily on that. I think that is something to be looked forward to.
Okay, great, great. There is one more question for Mr. Anurag.
Yeah.
Working as an internal auditor, how difficult is it to agree on approach with the, statutory auditor for testing procedures?
Sure. So once the testing or the test of effectiveness is complete, at that time the statutory auditors they ask for the IFC testing sheets. So and they themselves then do the walkthrough and perform the testing. I mean, on a sample basis, like sample, as they take our thing as a base to understand the process and to look at the control environment, and they then take samples from among the internal auditors sample, and then they test the controls as such. So yes, so different stat auditors have different mindsets and different way of evaluating the controls. So it is sometimes a challenge also to convince the stat auditors about the templates and everything. So it's best to align with the stat auditors to solve their queries. The more you engage with them, the more comfortable they will be. And even if they have some specific requirements, you can go ahead and do that with them. So that's the way to go. And uh, anyways, like after an IFC, the internal auditors have to deal with the stat auditors, and the stat auditors are, as it is, like a very, very important, part, and it's because stat audits have that kind of an importance. So it's best to, keep communicating and align with them, and solve their queries.
Okay.
I think
Thank
another
you.
practical way, if I can add to it what Anurag has already said, another practical way which I most often use is, or which I find that it is agreeable to most people or majority of the stakeholders, is you agree with your stat auditors on the materiality aspect. Let's say if you were to do a materiality assessment on a financial statement level or on an account level. So once you align with your stat auditors on materiality, then I think ICFR becomes a lot more easy, because stat auditors will be mostly looking for material weaknesses in the internal controls which impact the financial statements. Once you have identified material accounts, then I think you're sorted with the stat auditors.
Mm-hmm. Nice. Um, Thank you so much, Anurag and Deep, for the answer. Any more questions, people? Okay. Um, Thank you so much, Deep and Anurag. It was really a very insightful session on ICFR. Me, I'm not even practicing, but quite a lot of things were cleared out for me also. So, Deep, thank you for focusing on the importance of disclaimer as a professional. It's Thank you for starting with that, because uh, getting clear of what your stand is in the session, it's very important. And this goes for, I think, every professional out there in whatever field you are. When you clear out what is your stand in the session and the disclaimer, it's really important. And this also shows how smallest details matter in risk and controls. And thank you for breaking down ICFR and simplifying the work of an internals control professional so well. I must tell, this flow of the whole PPT was really well made. And also, one thing which I really loved is the broadening the role of internals auditor. Thank you, Deep, for showing that.
Thank you so
Because,
much.
yeah,
Always
because
happy
when you
to
think
discuss.
of internal auditor, you feel it's such a one job or something, but controls can be applied so many ways and so many roles. It was really a eye opening thing.
So it's
uh
not your fault exactly. And just to share it with you, when I started with internal audit
uh-huh,
somewhere back 15 years ago, I was told that internal audit is about checking compliance to the policies and procedures. Take the policy
uh-huh,
and just check the compliance. That's it.
uh-huh.
That is all an internal auditor does. Nobody ever spoke about what is a business model, how companies making money, how companies losing money,
Uh-huh.
what are those people who are charged with governance. I also saw the SA 315 pretty late, so to say. When I came into my practice, that is where I felt the need that standards on auditing are something which are needs a bit of refreshment. So I picked up those out of my free time, and I am happy to see a lot of things exist for a long time. It is just that whatever we are involved with, we sometimes either deprioritize, or by the passage of time we forget those things, even though
Exactly.
we know many of those things.
Everything is going back to basics. When you go back
Yeah.
to basics, your concepts get more clear.
Yeah.
Yeah, and thank you, Anurag, for explaining the whole project planning thing so well. And the template for project planning was really helpful, and I'm sure ki the young CAs will gain a lot of out of it. And even the drafting of proposal was really beneficial. And I will also take few points where I can imbibe that in my work too. So overall, thank you so much, Deep and Anurag, for giving your special time to everybody and explaining this concept of ICFR so well. Thank you so much. Thank you so much for everybody for being there and asking your queries. If you have any more queries, you can very well. I'm sure Deep and Anurag will be really glad to help you out even on private
Sure,
messages.
sure, anytime.
Thank
Sure.
you so
And
much.
special thanks, Deep, for accepting my invitation. And not many people know that till late night yesterday you were preparing or compiling the presentation. So thanks a lot. A lot of hard work goes into this. And thanks a lot, Deep, for coming in and sharing your thoughts on IFC.
Thank you so much, everyone, for listening, for your patient hearing, for sparing your time on a Sunday, and thank you, Anurag, for this initiative of yours. I think it helped me to, just while I was compiling a couple of new thoughts that came to my mind. So I'm thankful to you for those, and thank you, Parinita, for taking this up and for organizing this and for really being there for the time. I look forward to keeping in touch with both of you, and thank you
Definitely.
everyone for spending your time. I'll share this PPT with you on LinkedIn as well. I'm happy to share it. If you need anything else, a lot of things are available on LinkedIn which are freely downloadable. You can use those. If you have any questions, please feel free to post it on a WhatsApp. Even if I am not in a scenario able to take your call, I will definitely respond or call back you.
Sure. Thank you so much, Deep and Anurag.
Thank you.
Uh, thank you, and have a good day. Have
You
a
too.
good June. Looking forward for something positive.
Thank
Sure.
you.
Thank you so much. Thanks.